What is up, traders? Welcome to the official Trade Talk channel, where I show you how I analyze price for the most consistent and higher probable entries to help you guys become better traders. Today we're going to talk about Bitcoin, what we seen last week and what we could potentially be looking for the week to come. So make sure you stick around until the end. All right, so right here on the chart, this is the daily time frame. What I have on the chart marked will be this current week's open. All right, and the reason that's important is because you can see when we made the weekly open, price remained bearish for the first 3 days of the week, meaning you could not close the daily candle above your weekly open. So typically in those types of conditions, you would potentially be looking for price to head away from the opening and move lower to make that weekly range expansion to the downside. And we did indeed get that move on this day. This day was extremely bearish. People woke up and seen a massive bearish candle heading lower to the downside. Now, this day was on the day that Joe Biden had a speech where he was discussing putting sanctions on Russia because of the invasion of Ukraine. Now, what he said in that speech was not very bullish or bearish, to say the least. And with the worldview that we currently have right now, I mean, the bearish conditions are very much still here. However, on this channel, we trade by price action alone, and right now price action is screaming that you could potentially be seeing higher prices. So let's talk about that. So since we put in that speech, that's big nasty wick to the downside, closed the day bullish, and then finally on Friday you absolutely got that close back above the weekly open. So coming into today, you can see that we even took out yesterday's high. So if we go into the intraday charts, you can absolutely see that price action is bullish. This means order flow is bullish. So what it means when I say order flow is bullish, you put in these intraday support zones and they are still intact, all of them. You see this, how the price is migrating higher. That means you're taking out your resistance levels and your defensive levels or your support levels are basically migrating higher. Now, all that could be taken out with one good bearish move. Obviously, we all know that that could happen with the outlook in the world today. But as of right now, I mean, looking for intraday opportunities, you have to go by what price is telling you, and what price is telling us is that it is bullish. All right, so with that being said, let's go out here to the monthly time frame. So we have a monthly close coming up on Monday, and it's going to be at 7 p.m. Eastern Standard Time Monday. What we're going to be watching for here is a close above or below Monday's open. Now, this isn't going to scream bearishness or bullishness. It's really going to scream nothing, to be honest with you. And the reason for that is if I take this line and bring it up here, you can see this is your opening month or the yearly opening range for this 2022, and you can see last month's candle, we are trading inside of it. So what we are doing is essentially pinging back and forth from last month's high and last month's low. Since neither one of those two prices have been taken out, this monthly range has specifically told us nothing. It means that we're pretty much unchanged on the month moving into next month. That means you're going to have levels to watch. Now, obviously, we look for intraday opportunities, so waiting for this monthly high to be taken out or this monthly low to be taken out before taking a position isn't going to happen. Your main areas of potential support and resistance will be as follows. Your support level is $38,491. That's for next month. And then your resistance level is obviously going to be $46,211.24. Your yearly opening range is up here as well. So that's your yearly open right there. If we go into the weekly time frame, you can see that we fell short of hitting that yearly open. The monthly candles open is also the yearly open, which we fell short of when we had our bullish push, and now we are on the backside of that. Yeah, so we fell short of that. We come in and we tested weekly support and we got a bounce there. There's also monthly support down there, so it is a key region for us to get a bounce. So how we're going to play this is we're going to basically just wait and see how the month closes out. Does the month close out bullish or bearish? Since it's Monday, 3 days, anything can happen. This thing could close like way down here, then that would be more indicative of bearish price action for the week to come. If it closes, above $40,000, then that's going to look more bullish. And that's how we'll structure our trades moving forward. Obviously, we'll have a bullish target of that. If we look for bearish entries, we're going to have a bearish target of this. So that monthly candle right there is the range of which we're trading inside of. Now, we do also have a 2-week time frame candle closing tomorrow with the weekly close. So whenever we get those, we typically want to see what the 2-week candle's telling us, because sometimes the weekly can be very deceptive. And if you look at this 2-week candle, you are still bearish, right? Yeah, you did take out last 2-week session candles low and you're moving higher, but you're still bearish. So technically your resistance is going to be $42,074 for the next 2 weeks. That's going to be the resistance area. So price needs to trade above that. And even if it gets above that, it can also move back lower. So we're kind of at a spot in the market. The bearish side is still favored in my opinion. I can obviously be wrong on these videos, but as long as price looks like this, we are going to be more than likely looking to sell rallies. And since the last 3 days order flow is bullish, you can typically look for resistance. All right, so right now the daily resistance is going to be the level or the line in the sand. Anything that's below that could potentially be looked at with short side entries, and you could be targeting lower prices. So let's move into today's price action real quick, and then we'll end the video. So today, here is your daily open. We're going to go ahead and mark that and then go to the hourly time frame so I can show you basically what happened in today's price action. So today's price action, you pushed higher, knocking out both your swing highs, that one and this one, and then you closed above those two levels, and then price slowly migrated lower. This is not an extreme bearish signal, but it does look a little bit weaker than the last 2 days were. If you're looking for short side entries, my advice would be then you look for 4-hour resistance, because the hourly time frame has already closed back above hourly res, and you've closed above your daily open. So we'll go out to the 4-hour time frame. You can see here you have this candle. This is the candle that pushed higher. Notice how it closed back below 4-hour resistance. So this could be looked at as a bullish trap since your low was taken out. So the line in the sand for short side entries today is going to be $39,411. If you get a 4-hour closure above that level, any short side entries for the day's range, today's daily range, is negated. You will not be looking for short side entries. As long as that level's intact and holding, you could take short entries from there. All right, you don't want to really necessarily take them anywhere lower than that, because then your risk to reward is skewed. What you will be looking for would be the daily low. So this would be your entry, this would be your target. That's where you would take majority of your profits off. We would stop to break even, so that way if price does want to revert back to being bearish because of, like I said earlier, Russia, Ukraine, everything else that's going on in the world, then you will be situated perfectly to capitalize on any further downside price action. And you don't want to be over leveraged or have too big of a position for that, because obviously we never know what price is going to do. We can only take positions at higher probable areas and then set stop losses. But right now you're fighting against the near-term trend. The near-term trend is obviously bullish. Order flow is bullish. Trying to take a short when order flow is bullish, typically those trades don't work out as much. Now, since you did get a bounce and an overall downtrend, that's, people look to short that, and it was a big bounce. So it's one of those scenarios where I would probably just sit on my hand for this weekend, let the Monday happen, let the close, see what happens on Monday's close. That's pretty much going to give us, our near-term bias if we're going to be looking for bearish entries or if we're going to be looking for bullish entries moving on in the week to come. There really isn't nothing to discuss on Glassnode. Let me go over here to the open interest put to call ratio. You can see that put to call ratio is trending lower. That is typically more bullish than bearish. Bearishness comes when you get that trending higher, right? Because people are buying more and more puts, not people, I'm talking about bigger investors, and then price rolls over and then they start to scale out of those positions taking profits, and that's why it starts to roll over. And you can see that here is your futures open interest. It is very low, and since we did get that big spike in price, I would have to assume with price trending higher, open interest down at really low areas, the next region or the next move could potentially be bullish. So that's what we're pretty much lining up for. So how do you play that tomorrow, for instance? Because by the time this video is uploaded and put out into the public, it's going to be too late for today's entry. But what tomorrow? Well, what I would do is I would watch support zones on the 4-hour time frame. You have one there, you have one there, and you have one here. Be a buyer at support if you want to be bullish. right? If you want to be bearish because you think that this is going to be the end of the road and price is going to roll over and head lower, then look to short at resistance. All right, look to be buyers at support, look to be sellers at resistance. That's how you do this effectively. And right now, you know, price is looking more bullish than bearish. This said everything to me. This big, steep, deep dive down into price, this should have seen more bearish momentum, but you can see here that you have completely wiped out this downside move. So your order flow is more bullish than bearish. So I'd be leaning heavier to looking to buy supports than resistance, you know, tomorrow and into Monday. But then after Monday, after the close, we'll have more data, then we can make better trading decisions. Hopefully this video helps you guys. If you have any questions, drop them down in the comment section below, as I do try to answer every single one of them. Make sure you guys trade safe, make sure you trade smart, and as always, happy trading, everybody.